Now at this moment, markets are looking very rosy. Some of you watching are getting very bullish, looking to go all in the markets again because the worst seems to be over, correct? On the other hand, there are some who are itching to sell everything, and today's video I'm going to address it. Because if you see headlines like this, Scott Bessent has said that tariff rate could return back to reciprocal levels if companies don't reach trade deals with US. To be specific, if countries don't negotiate in good faith, their tariff rate will go back up. That means back to square one as to what we faced in April when market went into crazy mode. Is this a repeat of tariff war? After this 90-day grace period, everything will turn back again. That's why the logic of better to sell first. Then there's another camp who's thinking that markets are too enthusiastic, that all the trade worries are behind already. Because market plunged in April and then rebounded 19.68%, correct, as of this point of filming. In fact, on the year to date, S&P 500 is up already. Such a rapid rebound definitely looks unsustainable. A rare 6-day win streak like what the headlines will read. And in addition, market greed fear index is now in the greed mode already. Very funny, huh? Just 1.5 months ago, it was just extreme fear. Then suddenly the meter moved to fear, moved to neutral, and now we are in greed mode. And in greed mode means market will definitely come down. Not what? If we see in terms of September 2024, the greed index was even higher, but markets continued to rally for the next few months ahead, correct? And what about for January 2024? The greed index was in extreme greed, and yet markets continue to rally for the year ahead. So this greed and fear index, just see it as a general sentiment gauge. It does not tell you when to buy or sell. Or yet another scary headline, JP Morgan CEO Jamie Dimon expects S&P 500 earnings to collapse. He's feeling that markets are too complacent and that there's higher inflation risk and even stagflation again. So all this sounds like a sell and go hiding kind of headline, correct? If you're getting too worried about these headlines, stop reading them before you sell everything and go into hiding. Hold all cash and hope for market to come down like what these experts say. Because today I'm going to show you that it's actually very dangerous to time the market. That's slightly different from if you have bought some when the market crashed and you'll take a little bit of profit. Maybe that's fine. Over in this screenshot, you also see that my cash balances in this account has inched up slightly. I have taken small profits of Palantir, which is something I've planned to do when it rebounded. But if you sell everything, go into full cash, hoping that the market will collapse because of the first reason, tariff war is coming back, second reason, market rebound is unsustainable, or third reason, S&P 500 earnings is going to collapse and that stagflation will come. All these assumptions are actually very dangerous to make. Take note again that old saying, the Hall of Fame room for market timing is an empty one. Myself, I used to read these kind of headlines, sell everything when the market rebounds and then start shorting the market, thinking that it will definitely go back down again. And what happens? Market continue to gradually climb and then trading losses start to rake up. Hopefully this message catches you before you make wrong investment decisions. And as always, if you appreciate it, smash a like. I'm filming this late at night. And again, smash a subscribe to stay tuned for more quality content to help you become a better investor. Thank you very much, and with that, let me show you the first thing to debunk, which is when markets rebound massively, it is unsustainable. That's very intuitive, correct? Wow, once it rebounds quickly, 20% in 1 month, that cannot be sustained. Let's look at some charts. Over here, we see indeed that this has been a V-shaped recovery against expectations of many. When markets plunged in April, I had no clue also that there will be a V-shaped recovery. It's just that when market is in panic mode, typically the risk reward is fantastic. And for myself, I had some names I had in mind to purchase already and they had fallen to good levels that I wanted to buy. If you had bought in that period, congrats. Buying then, if you think back, was scary because all the headlines suggested that the world economy will be in trouble, especially when Donald Trump sounded like he's never going to relent.
Because I told him if you retaliate, we're going to double it. And that's what I did with China, because they did retaliate.
Just 2 months in, we realized how fickle that message really is. But let's move back in history to see some examples whether a quick rebound is definitely unsustainable. The first example is the start of 2022. Quick rebound up, markets dropped around 15%, and in this case, this quick rebound indeed was not sustainable. Markets went down into a bear mode for the next 1+ year. Then we move back a bit to 2020, when there was COVID crash, 33% drop from here downwards, and what we see is that market rallied up, and was the quick rebound unsustainable? Maybe if you see in terms of days, yes, there can be pullbacks, but this was actually a sustainable rally against all expectations. 2022, there was headwinds that lasted for a year. 2020, there was tailwinds from monetary stimulus. Then we move back again to 2018. This is where I did a previous episode. Check it out, and I'll leave it towards the end of this. Market came down because of Donald Trump's tariff war. At around this point, China and US actually had a 90-day pause, similar to now. After the event, there's a sharp rally upwards. And it's the same thing. Is the rally sustainable? If we look in terms of days, not too sure, but certainly when we look for a longer period, this sharp rally was also sustained. So all in all, I brought up these examples to show you that yes, indeed, there were some instances where the rebound was not sustainable, but we cannot assume that all quick rebounds are not sustainable. What is the reason? Personally, for myself, I think is that once the worst bad news is out of the way, market climbs a wall of worry. When more and more people get convinced that, hey, the risk factors are overblown, I'm underinvested, they come back in. And that's why most quick rebounds can actually sustain. More importantly to know is that nobody knows what's going to happen in the future. And that's why the first thing to do if you're underinvested is to start investing right now. Avoid anchoring bias, which means, oh, you only want to start investing in if S&P 500 gets to 4,007, not now. Then in this kind of mindset, you realize that you always miss opportunities, you're always waiting for a sideline and an imaginary number that feels safe, that will never come. There is no perfect time. Yes, ideally you bought back when it crashed, but it was hard, as you could see. I did suggest that I'm also buying already in previous videos. But if you missed it already, start somewhere. Start now. Whether there's a small pullback or not doesn't matter too much. Start today, then wait for a next crash again and face that dilemma whether to take action or not. That wouldn't be how wealth is actually built. So if you're uninvested, start investing today. And the second part is that if you have investments already, stay invested. Very powerful. Simply by staying invested, you continue to grow with the markets. And let me show you my example. This is my own trading account. It was at 366,000 at its peak. And when markets started selling down, the value actually dropped by more than 80,000. It bottomed on 7th of April. And if I've given up my portfolio right then, that would have been a massive mistake, correct? Fast forward to today, you realize that all the losses have been gained back already simply by staying invested, and the portfolio right now is at all-time high. Again, it's about staying invested, and hopefully I've shown you through my own examples the benefits of doing so. As always, if you have questions, leave them in the comment sections. Thank you for watching right at the very end, and let me introduce you to some of my previous videos. This is the one that describes on the history of tariff war back in 2018. Check that episode out. It highlights certain worst case scenarios that gets you a bit more mentally prepared. With that aside from here, see you there. Take care as always. Goodbye.